welcome to this Bell Direct Weekly Update. I'm Julia Lee, an equity strategist with Bell Direct. And it's nice to see the Australian share market having finished out the month of May with a slight gain of 0.5%. May does tend to be the worst month of the year for the Australian share market if you go back to 2000 and crunch the numbers. But nice to see that we've bucked the trend this year. Let's start off this week by having a look at Macquarie and the banks. Macquarie is saying that we're seeing system growth of around about 5.3% at the moment. That's a 3-month growth rate annualized, supported by housing growth, which is around about 5.8%. That means there's value in banks at current levels. They haven't outperformed on 3 of the big 4, ANZ, NAB, as well as Westpac, while they are neutral on Commonwealth Bank, the regionals such as Bendigo and Adelaide and Bank of Queensland, but they haven't underperformed on Suncorp Metway. And of course, the banking space is where we're seeing a lot of divergence in opinions at the moment. And in particular, UBS saying that the RBA will probably have to cut. And if they have a look at the reasoning for that, it's because macroprudential tightening phase 3 they see is a game changer. Indeed, UBS saying that housing is already weakening more quickly than their bearish view, with home loans dropping by around about 10% since August last year, and that's before the full Royal Commission impact. They have actually shifted their base case scenario towards the credit tightening scenario, where home loans fall by around about 20%, credit growth drops to flat, and prices fall persistently, and that means the RBA holds for longer. So as you can see, there is quite a bit of divergence in the area of housing and how that might impact on the banks and the economy at the moment. Having a look at Morgan Stanley, where they are focusing in on some of the blue chips on the market and the ones that are in a good camp with tailwinds and the ones that are in a bad camp that are looking pretty challenged. And in the challenge camp are the banks, Essentia, Woolworths, Telstra, as well as Suncorp Metway, facing increasing competition or structural challenges. But tailwinds for stocks like BHP Billiton, Rio Tinto, South32, Woodside Petroleum, Origin, CSL, Macquarie Group, Transurban, as well as Insurance Australia Group. Having a look at Value Host, and they're looking at the listed investment company space. These are fund managers or asset managers through the LIC space, and this is growing in popularity on the Australian share market. Value Host saying that top picks refer to preferred exposures within each sector based on numerous quant as well as qualitative factors. However, they should not be treated as official stock recommendations, but merely as a guide to when they would apportion funds at this particular point in time. But if you're looking at traditional value holds at this point in time, like Diversified United Investment, as well as Australian Foundation Investment. In the large space, they like WAM Leaders. They say that WAM Leaders is now 50% invested in the ASX 20 compared to 45% at the end of the March quarter. WAM Leaders has also progressively increased dividends each period since inception and is currently trading at a slight discount to net tangible assets and has a franked yield of 4%. On the small side, they like Acorn, which has been one of the top performing LICs in their coverage world for the past year. Despite the outperformance, though, we are seeing Acorns trading at a discount to net tangible assets, and that means it makes it an attractive entry point. In the international space, they like MFF, PGF, as well as TGG, and of course you can trade these LICs on the ASX as you would do shares, so just putting your buys and sells through your broker such as Bell Direct. Having a look at Shaw and the metals and mining space, where the Shaw is saying that consolidation is in its 6th bull market move, having added around about 150% since 19th of January lows in 2016, including 5 bull market moves more than 20% along the way, and more recently adding the 6th near bull market move up by 18% so far. They're saying that a consolidation is no doubt warranted. Also noting that in that metals and mining space, that the uranium price is low, and with around about 20% of supply now potentially offline for an extended period, perhaps it's time for the uranium price to tick higher. So a bit of a contrarian view there coming through from Shaw, but overall in the space saying stay focused, don't get wobbly knees, and look to add on consolidation to fresh higher lows in coming weeks. So now we are into June, which is typically confession season, so watching out for potential profit upgrades and downgrades ahead of that all-important August reporting season for the Australian market. I'm Julia Lee, an equity strategist with Bell Direct. Hope to see you next week.